Hello and welcome to this episode of Open Banking Expo TV with Bottomline Technologies. I'm Ellie Duncan, Head of Content at Open Banking Expo and your host for today. And I'm delighted to be joined by Teresa Connors, Head of Bank Proposition at Bottomline, and Ed Adshead-Grant, General Manager and Director of Payments at Bottomline. Welcome to you both. Now, in this episode titled The Future of Competitive Advantage in Banking and Payments, Teresa and Ed will be talking through their key takeaways and insights from a recent report of the same name conducted by Bottomline. This survey sought to measure the progress made by banks and financial institutions towards modernising their payment strategies. So we'll come on to some of those key findings in a little bit, but I'm going to ask Teresa to start by setting the scene for us, not just for this report, of course, but also for the kind of wider industry at the moment. So, Teresa, how has COVID-19 impacted the key focuses of banks and financial institutions? How have they had to reprioritise?
They have, as we know, because COVID has affected customers and customer needs, and a bank's focus, of course, is completely based upon what do customers' needs and meeting those needs in a safe and easily accessible solutions. So banks have a very long to-do list, and yes, COVID is shaping that to-do list and the focus. But it's not all just COVID-led. You know, there are things also about advances in technology and meeting and maximising industry and regulatory initiatives. But you know, when I hone in though on focus and looking at the report and the research that Bottomline have undertaken recently, we get a really good snapshot of what is on a bank's mind. The research was undertaken with over 300 banks and financial institutions from across the globe. And they told us that their research is on digital transformation, and that really was top of the shop. Real-time payments, cross-border payments, business continuity, relationship management, and insider fraud. Now, there are threads among all of those aspects there, but most certainly on those top three, digital transformation, real-time payments, and cross-border, there is an underlying thread there about updating systems and also developing and maximising sort of the opportunities of the new propositions that can come from digital transformation and real-time payments and cross-border.
Great, and thanks for kind of, as I say, setting the scene and providing a bit of context really for this global report. So staying with you for now, Teresa, then, are banks and financial institutions, as far as you can tell from the findings, are they on track with their digital payments modernisation strategies? And if they aren't, what were their reasons for not being on track?
Well, the best answer I can give you there is the outcome from the research, of course. And the respondents were asked, how confident are you in your digital transformation strategy? And they were given a choice of 5 responses. So 32% said we're highly confident. 37% said we're somewhat confident. 19% said we're somewhat sceptical. And that's quite a powerful word as well, sceptical. 7% said we're highly sceptical. And 6% said, not really sure, probably not had too great a chance maybe to think about it, or the strategy was very much in its infancy. Now, when we analyse those figures, it tells us that the majority, happy days, 66%, are comfortable. They're broadly comfortable with their transformation strategy. However, just over a quarter at 26% aren't. And that's a real disconnect between the previous answer I gave you when we said, well, you know, what are banks focusing on? And top of the shop was digital transformation strategy. And here we have over a quarter saying, well, we're not entirely comfortable with ours. That's concerning for many reasons. The most obvious one, of course, is that the digital transformation strategy is the bedrock for success and for future propositions. Now, banks are facing a lot of demand and challenges on very, very finite resource. So, you know, part of that answer is that there's just so much going on. And let's face it, banks also have in some respects, greater responsibility and burden than some of their competitors. For example, they've got a greater regulatory burden. So that coupled with updating infrastructure as well, that can make life challenging. And so you have to be very, very confident in your digital transformation strategy.
Mm-hmm. Yeah, that's really interesting actually to hear about some of those key findings there. And as you say, that word skeptical coming in. And Ed, I want to bring you in at this point to talk about, I guess, the reason that banks and other institutions are on this kind of journey towards digital payments and modernising their systems. And that's because of all this legacy kind of tech that they're often still burdened with, shall we say. How much is this legacy infrastructure still an issue for banks?
Well, it is an issue. It's there, but it needs to be there. It's, we're operating critical national infrastructures securely, resiliently for many years, and a shout out to the whole industry the last 20 months or so to be operational with remote working, with a different cultural approach, with different backup routines. It's put a lot of sort of DR and business continuity projects to test, and we're up and running. So I just want to recognise that stuff works, and it's only that 0.001% when things fall over that you tend to hear about some of the challenges. It is a challenge that legacy, by definition, the digital transformation is the norm now. It's the constant every year. It's there. In fact, on this report, it's interesting to read that 64% put it as their number one item in terms of prioritization. This digital transformation, getting your head around it is key. I think it's a perennial thing. We've got to. It's a bit like the San Francisco Bridge. You're painting it from one end to the other. It's never finished now. You need to compete, update, improve customer journeys, while also staying compliant, as Teresa mentioned, with the compliance burden to make sure that funds arrive securely and the expectations are met for the regulators and all the various laws and expectations behind running critical national systems. So legacy is there. It's just part of the way we need to manage around innovation, modernisation.
I guess then the next question is does this give challenger banks a bit of a head start? Because of course they've come into the market, they don't have this legacy tech that the incumbents do. So where do they sit then?
Well, I think they take this wonderful space of starting with a white piece of paper, here in 2022, how do I go to market, get my charter, raise the numbers? So they don't have the customers to begin with. They've got to cut through with typically a specialized entry point. But once they build up some volume, yes, they don't have that legacy. They can move quick. They're agile. Their code drops are multiple times per day, while other mature incumbents may be several times per month rather than per day, or per year, a calendar of once a month or something. So they do have that advantage, but they don't have the scale. But there's a lot of money being invested in the payments world. If you look at the investment buckets from VCs and private equity, there's over $1 trillion out there in cash that can come into this area. And of course, sitting in the UK right now, we've got record fintech numbers being invested still, even now during the COVID year. So a lot of interest in bringing new ideas for inventing. And banks have started investing themselves, taking minority investments, often buying up these new challengers, or they may get to a scale where they stay independent. So at the end of all of this, the good thing is the end user, be it a business, be it a consumer, is receiving more choice. And that has to be a good endpoint with these new challenges.
Well, Ed, let's move on to perhaps some more insight and findings from this global report, because as Teresa alluded to earlier, banks and institutions are on slightly different kind of paths when it comes to payments modernisation. For those that are perhaps slightly behind, what impact will kind of slower adoption of payments modernisation have on their operational efficiency?
Well, it's interesting because payments can make a real difference. You can look at some of the McKinsey reports at a macro level. If you have better payments, they've documented GDP lifts from 1 to 6%. So at a macro level, if you get the economy, I often call payments the electricity of the economy. If you've got that electricity buzzing, humming, and it's easy and accessible, everybody can get to ultimately real-time payments and real, modernized payments. So you're not on 3-day cycles. When I look at some of the UK work, or recently some of the reports out of the US, over 30 days to get a cross-border payment out from the US to some foreign destinations. That's just not competitive, I suggest, or sustainable for modern trading practices. So if they are being slow, then they're going to have these newcomers that we've mentioned snapping at their heels, showing an alternative, a different, quicker, better way to do it. And that ultimately people will vote with their feet. And if they like the newer, modern, shiny looking options, they'll go there. So it's really important from a competitive point of view to absolutely modernize and give it that priority on the roadmap.
Yeah, and part of that modernisation, I guess, is kind of having this one central platform for all activity. So it's a far more efficient kind of system. You avoid some of those silos, I suppose, that banks have historically had. So I just, perhaps, Ed, you can explain to us what's the argument for, on the one hand, software as a service and cloud to kind of deliver this payments modernisation versus on-premise?
Well, the arguments are pretty well rehearsed. I mean, over the last 20 years, I can remember doing what is now called cloud in the card processing world. So an outsourced ASP models that we used to call it. So in terms of the classic arguments, yes, there's the economics of it. There's the speed. There's the getting rid of the compliance burden. So bringing in another partner to take on some of the work. Innovate through an outsourced version. But by the way, this isn't either or. What we're seeing is you're not either just outsource or on-premise. You can blend it in terms of adding bandwidth to your IT sourcing, to your solution sets. So so bottom line, we are almost entirely SaaS now in terms of you can consume us as a subscription. That's, I think, the growing IT model that's been creeping along for many years, and we'll see more of it, I believe, as we go forward in terms of partnering as a blended IT sourcing strategy.
Mm-hmm. Yeah, we hear a lot that word partnering at the moment in the industry. So there is this idea that obviously you can bring another organisation in to help, but ultimately, I guess a company has to get kind of buy-in, top-down buy-in, and build a kind of business case for implementing like either SaaS or the cloud, whatever it is. So, do you have any advice there, Ed, for how you might do that?
Well, the biggest thing is the realization that you cannot work in isolation anymore. So if you are an organization with an IT strategy that says we do everything in-house, I would really challenge the competitive sustainability of that. Because today's all about linking up. We're moving to API economies, partnering, and to do everything in-house, to me, is very limited on sustainability. So in terms of leadership of the business and the technical part of it, I would strongly encourage looking at partnerships, seeing how you can connect and add more value for your shareholders, your employees, your customers, because it can only bring in more functionality, particularly as we move into this API-driven world where functionality could be a click away. And the classic example is having a Google Maps, punch through on your glass, added to your customer journey, and you've got geographical locations, things like that. Just as you experience that kind of blended partnership, you could be having that across the whole payment chain in many different parts of the value chain for information, real-time information, some of the open banking feeds, some of the work Swift is doing to give you real-time extra information. There's just so much now. We're in this digital world that you have to be able to reach out, connect, partner, in terms of how you organise yourself. That would be my view.
Mhm. And I guess so often one of the drivers for banks and other institutions to undergo this sort of modernisation process is sort of regulation and compliance, isn't it? So what can you tell us from what you gathered from the report about, whether we've reached a point where the industry sees regulation and compliance as a friend rather than as a foe? Do you have any examples from the report of that, or indeed elsewhere?
Yeah, so I'm quite interventionist, I think, on this market with the regulator. There are things that are moving so fast, and some markets do break. They're just not competitive and sustainable. So the example, and I don't think it was particularly covered directly in the report, but the big one at the moment is just the amount of fraud that we're seeing moving through the payment industry in the UK, and we see it overseas as well. Particularly in the UK, we have a position now where authorised push payment fraud, APP fraud, has overtaken card fraud, first time in history. And the trajectory is it could hit the horrific watershed of £1 billion leakage by the end of the year when it reports out. Now that's failing consumers, that's failing businesses, that needs corrective actions. There are some projects underway, like confirmation of payees locally to help out on that. But that to me is something where the regulator needs to step in, help out, and give more protection to the users of the payment systems. But that's just one example. Another one might be open banking, where there's about 60 countries now that are involved in open banking with programs. Now, some markets are more interventionist, like Europe and UK. We've had mandates to adopt it. I think that's gone quite well and it's speeding up. But you could take like the US example, where it's left to market dynamics and it has a different growth trajectory. But again, on that example, I would fall on let's mandate it. Let's make it sure. Let's get budgets agreed. Let's move forward together without ambiguity. So I'm a big fan of specific regulatory intervention on these kind of markets where we think we can do better.
Yeah, let's bring you back in, Teresa, as well at this point, and give Ed a bit of a break for a little while anyway. I know that, Teresa, you can talk about another area of research that Bottomline has done, and kind of point to some of the key trends that you're hearing about, how that compares and contrasts with the findings from this other global report. So can you talk us through this barometer, as you call it?
Will do. As Ed says, Bottomline works with a wide cross-section of banks, and that's helping banks with their own core business, but also partnering to deliver solutions to end customers. So with that in mind, Bottomline also undertakes an annual business payments barometer, which seeks the views of corporate treasurers about kind of what trends are they seeing, what's keeping them up at night, what are the big things going on in their world, and yet what really is front of mind for them. The barometer now is in its 6th year, and the big messages, just to kind of the pieces that chime with this piece of research as well, acknowledging that the barometer is corporate treasurers, but corporate treasurers tell us that getting money into the business has never been so important. It's hugely important. And a big driver and trend for them as well is moving to SaaS and cloud-based solutions. And fraud as well for larger enterprise level, like really multinational corporations who trade internationally. Fraud is is a real key concern for them, because you get lucky as a fraudster on a large organisation, it's a big payday. And I completely echo what Ed has said there about initiatives to combat fraud. We do need proportionate balance and everything to protect end users, and I'm talking there about the demands that are made upon providers. But completely, I do think regulation and proportionate and right and balanced regulation is the way to go. But I said that I would do a compare and contrast between the barometer and corporate treasurers and the competitive advantage for banking and payments report. So analysing the responses in the advantage of payments report, we said to the banks and the FIs, so what are the big priorities for you then? What's kind of top of your to-do list, as it were? The second most important, because I'm keeping the most important for last, was creating new revenue streams based on overlay services. And we're talking there about things like request to pay. Now that directly chimes to their corporate treasurer customers, and indeed retail customers to get money in as quickly as possible, a lot of those overlay services. So complete chiming there. They also spoke to us about updating infrastructure to improve operational efficiency. And again, Ed has spoken quite eloquently about sort of the challenges of so-called legacy infrastructure. They're also talking to us about refreshing cross-border payment strategy. Cross-border really has come up the agenda quite significantly for our banks in recent years. And we'll probably go on to talk about why that is. Combating fraud as well, as we've spoken about, for corporate treasurers and as well for banks, because it's a big payday if you get lucky with a bank as a fraudster. So that's very much one of their priorities. Meeting regulatory deadlines, of which there are many, and we know, and moving to cloud and SaaS solutions as well. When I talk to banks, they talk to me as sort of to echo what Ed has said there about this blended approach. Is kind of anything new, Teresa, we want to consume by APIs, we want it sort of cloud, SaaS, banking as a service. We want that scale, we want that agility whilst we transition from our legacy infrastructure. But I said I would save the big one for last. So on this research, and we said to banks, what's your biggest priority? 55%, so that's over half, said it was adopting new payment rails, particularly with real-time payments. And again, there's a link there for all of the bank's end customers for receiving and making payments as quickly and efficiently as possible.
Thanks, Teresa. Let's come to you now, Ed, where Teresa left off, really, with real-time payments. Ed, can you tell us, how has the appetite for adopting real-time payments changed over the past 12 months? So we're obviously at the start of 2022 now, so we're kind of looking back over 2021, I suppose.
Let me put the visual in. It's gone that direction, up and up. It's so faster payments. If I again take the UK, where a lot of our work is now the majority of the rails. Last year it was 53% of all payments were on the faster payment rails. It's going to be much higher when it gets published. Most of the other rails are kind of flat and stable. And when you think of open banking, that feeds faster payments. It's typically an open banking payment is a faster payment. People don't talk about open banking onto a BACS payment. It just doesn't work. So a lot of the feeders, a lot of the innovation, a lot of the energy front end is in the instant economy. It's in getting everything on screen and real time. So the whole COVID story and working from home and remote has only fed that digital machine to say, look, how do we get things moving faster that can still be tracked? Of course, I mentioned the fraud because that gets pulled along faster as well, which is just another topic. But yeah, the growth is up and the interest is up, and I can think of very few projects where the real-time payment isn't just now assumed in the story.
Mm-hmm. Well, that's all really positive. So let's dig a little bit deeper. I mean, you spoke about the UK there. Have initiatives like the UK's new access model and Target 2 tips made access for smaller players and those challenges that we talked about earlier? Has it made a difference there? And are there any kind of similar schemes elsewhere?
Yes, it has, and we've been working hard on always improving access. And probably the magic word, you've mentioned a few there, the magic word is interoperability. That's the magic sauce that we blend into all of our work. So whether it's TIPS, RT1, SEPA, Bank of England work, faster payments, all of those, SIC in Geneva, in Switzerland, all of those we are looking for our customers to be able to access. So, multi-rail across multiple countries. And Teresa mentioned cross-border. I mean, the work at the G20, I'm a big fan of the work at the G20. They've got some bullish targets to get cross-border functioning much quicker, better, with more access. The numbers there are a cost of less than 1% by 2027 on all payments. And they want 75% of all payments to be real-time instant by 2027, and at least same day, 100% to be same day by 2027. So you've got lots of interested parties at a macro political level pushing on this. You've got the regulators pushing in some markets. You've got the open banking movement in over 60. There's real-time projects in over 60 countries as well. So there's only one direction, which is quicker, faster, more ubiquity. And it's, when do you get on the wagon? When can you afford it into this roadmap against your priorities?
Mm-hmm. And then to what extent is the statement true rather, that if you solve for real-time payments, then you have a platform for overall digital payments modernisation?
I think that is true, but it's not the whole story. The payment is at the back end, and you just expect it to work. Again, it's back to it's 99.999%. But also you need to make sure that the rest of your process and operation speeds up and is aligned to the faster payment at the end of it. And if you want the whole journey to be rich and fast and secure, then how does the customer onboard before they load up a savings account? I've just come off a conference for building societies in the UK who are looking at quite a large drop off on savings accounts, because you set up an account, and you could apply it to banks as well, and then the first payment isn't made, and therefore there's a 35% zero balance saving account. So then you've got the overhead of saving accounts they're empty. So great to have a real-time payment, and you can feed a real-time payment into the opening of a savings account journey, but you have to set the processes up and the AML checks and everything else end to end to make sure that the end customer result is there. And in that example, the saving account is not only opened, but is loaded with first payment and then used, rather than left to atrophy to one side. So it's important. I think it's a qualifying table stake moving forward on most areas, including payroll. There's another new project launched by HMRC to make payroll more real time, and a few other characters there. So we're only going to become faster, but let's look at the whole process end to end, so everything else is in sync.
Mm-hmm. And Teresa, let's come back to you now to talk about kind of ISO adoption, and whether as well there are any insights from this report about how confident you are that they're going to hit deadlines, both from a SWIFT and a market infrastructure point of view in terms of ISO adoption. Can you talk us through that?
And Elliot, I'm delighted that you said from a SWIFT and a market infrastructure point of view, because it's not just a SWIFT deadline, as we know. And just so we're all on the same page now, ISO has the potential to be a real game changer. In a nutshell, what ISO does is it enables much fuller data to be carried with a payment, and that gives the potential for brand new propositions, revenue streams, efficiencies. It helps with sanctions, screenings, all kinds of things. I'm a fan, as you can tell. ISO is a global standard. You mentioned SWIFT there. It's a global standard. It's already in 70 countries, and it's predicted that by 2025, 80% of all high value traffic will be by the ISO message standard, because ISO is a standard. And it might be boring, but I'm a fan of standards as well, because to Ed's earlier point, with standards comes interoperability. And to me, that's like gold dust. That really is the magic juice, or magic sauce, I think is Ed's phrase for it. So to your question, sorry, the SWIFT deadline is this November. And that deadline has a lot of momentum attached to it, because other systemically important infrastructures also have that deadline. For example, Target 2, CHAPS, BARNet and others. Just a word though for anybody listening, sort of just so they know that CHIPS and Fed, their deadline is sort of 15 months after that. 15 minutes, that would be good. 15 months after that in February. That's really good. In February 2024. So I have confidence in that deadline, and we are seeing a lot of proactive activity as well from banks and other providers, getting customers ready for ISO, describing to them what it is, describing what's going to change, how their MT messages might look a little bit different, and what that all means. And in actual fact, does that have an impact to their own processes in a positive way? You know, what else can you do with that extra information? So there is a swell of activity going on towards these deadlines, I'm delighted to say.
So Teresa, staying with you and ISO, what paths are there for ISO adoption? So when we think about ISO adoption, most certainly within Bottomline, that there are probably three paths, and I'm going to pinch something from a BBC programme and call them basic, better and best. Many people will know what programme I'm referring to. So basic is connectivity only. So under that option, you subscribe to Fin Plus to enable the service. You set up and test new folders and new routing rules. You manage interoperability, that magic word we've been talking about already, with translation services. So you're not directly interoperable or interoperating. And you move to ISO when your counterparty asks you to do so. So that's the basic. The better option is market ready. With that, you implement transformation and enrichment services. And people say, Teresa, what does that mean? And what that means is you can use ISO immediately, either on a standalone basis by consuming by APIs or via a universal aggregator. And you can go pretty much at your own time, and you can go on a like-for-like basis as it is today, or you can move as quickly as you want to full enrichment. For that, you have to test your messages next month, but you're able then to confirm your readiness to counterparties. So it's slightly different to the basic option, kind of you're being asked, but you're able to proactively say to your counterparties under the market ready option, hey, I'm ready. You can also then take your time to migrate your back office systems to ISO readiness at your own pace and to your own schedule with other work that you've got going on. Then the best option is ISO native. And ISO native, really the best way I find of explaining it is to say it's all of market ready, but instead of doing the back office piece at your own pace and time, you do that immediately. And what that does, it maximizes the resource you're putting against ISO. ISO is a complex and a resource-heavy program. You need partners to help you through this, and partners that have done it before, by the way. So to really maximize the spend and the potential, the speediest route for new propositions and readiness, based upon the richer data that comes with ISO, is by becoming an ISO native. Great, thanks, Teresa. And Ed, just finally then, what would you say to the 16% of those who responded to that report who say they need more information, and the 5% who say they have no interest in open banking at all?
Well, data's imperfect, but let me take a guess that the 16%, well done, they're aware. The 5%, I hope they do some more reading over 2022 for our planning. It really is one of the largest themes across payments and financial services. So, and to be fair, there may be one of the 60 countries that hasn't started open banking. I don't know the 5% that seem to think it's irrelevant, but the analogy for me is just like the internet. In 1997, I still remember as a kid listening to Nicholas Negroponte down in London and learning about this thing called the internet and writing a one-pager for the chief exec saying, hey, we could use this thing here. It's a new capability. And we learned the use case and we went live and we're very successful. So I put open banking in the same place. The use cases are coming out for customer journey, for risk, really to hyper personalize your customer journey. So I believe it's relevant to probably everybody. Just get stuck into some of the industry innovations that are happening. And delighted, reach out to us and we'll share what we've been doing as our investments.
Well, thank you very much, Teresa and Ed, and to Bottomline Technologies as well, for presenting those findings and for talking us through some of the really important trends at the moment as we go into sort of 2022 and as the year gets underway. Thanks as well from Open Banking Expo for watching. Goodbye for now.